This is the second part of the monthly budget form presentation and picks up where Part 1 left off. Back on the transaction list, there are 4 transactions on the 18th. They are groceries, $27.79, eating out of $8.75, a video rental of $5.75, and the $35 payment on a credit card. On the line for the 18th in the blank form, we enter a minus $27.79 under food and a minus $35 under debt. The dinner and the movie are lumped together for a minus $14.50 under entertainment recreation. The next 2 transactions on the transaction list are actually transactions for multiple categories. On a trip to Walmart on the 21st, Joe bought food of $23.45 and clothing of $12.35. On the blank form, these are entered as separate transactions in the appropriate columns, even though they were paid for at one time. So in the clothing column on the 21st, on the blank form, minus $12.35 is entered. On the same line in the food column, minus $23.45 is entered. On the February transaction list, $10 was paid on the 24th for a gift, and $9.45 was paid on the 25th for gas. Obviously, Joe doesn't drive very far. On the blank form, minus 10 is entered under miscellaneous on the line for the 24th, and minus $9.45 is entered under auto on the line for the 25th. The final spending for February is listed on the transaction list as $45.25 for groceries on the 26th and $12 for a haircut on the 28th. These are entered on the blank form as a minus $45.25 under food on the line for the 26th and a minus $12 under miscellaneous on the line for the 28th. One last transaction on the list is interest of $2.50 credited on the 28th. This $2.50 is entered on the blank form under income next to 28. Going down a few lines on the blank form, you'll see that the monthly total for each column is completely filled in, and the surplus deficit for each column is completely filled in. This is done by using a formula in the month total box that sums the half-month subtotal in all the transactions for the second half of the month. The surplus deficit for the income is calculated by subtracting the budget amount for the column from the actual amount for the column. For all the expense columns, the formula shows the month total plus the budget amount. Since the month total is actually a minus, this subtracts the month total from the budget amount. The next line down is the year-to-date budget. Since this is a simple budget and does not allocate differing amounts for different months, the formula on this line multiplies the monthly budget times 2. The logic behind this is that this is a February schedule, and February is the second month of the year. The next line down will need some calculation. This line will add the spending or income from January to the spending or income for February. Prior year-to-date numbers are usually found on the prior monthly budget form. In this case, it would be the January monthly budget form, which has not been provided for you. However, the January actuals are provided for you on the January 2008 Totals tab. We now click on the January 2008 Totals tab and add the amounts there to the amounts just calculated. The January income was $1,582. Click on the blank form tab and we'll use a formula that goes equals $1,582 plus the month total in the income column. By pressing enter, this box now shows $3,164.50. The next number on the January 2008 totals is $140. Click on the blank form tab and enter the formula that says equals 140 minus the number in the month total box. Since these are costs and are minuses, we need to subtract to add. Press enter and the $280 is in the box. The tax column is again netted out of income. And the number on the January totals for housing is $499.35. The formula on the blank form will be equals $499.35 minus the month total box. Hit enter and see $937.10 in the box. Next on the January list is $123.67 for food. The formula on the blank form is equals 123.67 minus the month total box, netting $279.96. On the January totals, auto is $212.65. Insurance is $30 and debt is $70. On the blank form in the auto column, we enter equals 212.65 minus the month total box to net $356.35. In the insurance column, we enter equals 30 minus the month total box to net $60. In the debt column, we enter equals 70 minus the month total box to net $140. Again on the January totals, entertainment recreation is $110.56, clothing is $0, and savings is $50. On the blank form in the entertainment recreation column, the formula goes equals 110.56 minus the month total box to net $164.66. In the clothing column, the formula is equals 0 minus the month total box, which nets to $12.35. In the savings column, the formula goes equals 50 minus the month total box and nets to $100. Finally, on the January totals, medical is $26, miscellaneous is $30, and investment is $60. Back on the blank form, the formula in the medical column is equals 26 minus the month total box, netting $26. In the miscellaneous column, the formula is equals 30 minus the month total box, netting $64. In the investment column, the formula is equals 60 minus the month total box and nets to $120. The surplus deficit line for income again subtracts the budget from the total actual to net 50 cents. For the expenses, it subtracts the year-to-date actual in each column from the year-to-date budget in the column. Plus results means there is still unspent budget in that category, and minus results mean that that category has been overspent. The final piece of this form are the summary boxes below the summary lines. I will scroll down so that you can see those. The This Month summary box records the total income for the current month, which is found in the month total box under income. Since that number is $1,582.50, we'll enter that in the box. It then subtracts the total spending for the month. The total spending is calculated by summing the month total boxes for categories 1 through 14 and comes to $1,188.19. To enter that, minus 1188.19 will be entered into the appropriate space. The surplus deficit now shows as $394.31. The prior year to date, again, is usually found on the prior monthly budget form. That has not been provided, but we do have the January 2008 totals. So we click on the January 2008 Totals tab. Here you find income of $1,582. Click on the Blank Form tab and enter it next to the total income under Prior Year to Date. Clicking back to the January 2008 totals, the sum of the expenses is $1,352.23. Click back to the blank form and enter minus $1,352.23 next to the total spending in the same box, and the formula calculates a surplus of $229.77. The year-to-date box, which we'll have to scroll over to see, just adds lines from the two other boxes and shows total income of $3,164.50, total spending of $2,540.42, with a net year-to-date surplus of $624.08. This completes the monthly budget form.